Welcome. In this video, ZBCN Coin can rise 200%. What is the reason? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
It is quite common for investors to react emotionally when downward trends are observed in price movements from time to time. Especially during periods dominated by bearish trends, many individuals tend to engage in panic selling and make poor decisions. However, what matters here is the ability to correctly interpret what the technical structure is indicating and to analyze effectively by understanding the language of the charts. Looking at recent history, we can clearly see that the price formed a downward trend structure over a certain time period. This descending trend line has clearly shown that the price is under downward pressure as it consistently made lower highs with each attempt to rise. But these structures do not last forever. A known truth in technical analysis is that no downtrend continues indefinitely, and eventually a breakout occurs. What is important at this point is to accurately identify where the downtrend has been broken and to calmly interpret the moves that follow this breakout. Although the price moved within this downtrend for a certain period, recent price action now shows that this trend line has been broken to the upside. This breakout is in fact a signal of a significant structural shift from a technical standpoint, because upward breakouts of descending trend lines generally indicate that buying appetite is returning to the market and selling pressure is weakening. These kinds of breakouts also often create a significant shift in market sentiment. The previously continuous declines that caused investors to lose confidence are gradually replaced by upward expectations. This leads investors to regain hope and start discussing bullish scenarios once again. However, not every breakout is immediately followed by a strong upward rally. On the contrary, due to the nature of technical structures, this broken descending trend line is typically retested. This process is referred to as a retest. In technical analysis, a retest is considered a healthy development, because when a trend line is tested again after being broken, it is seen as a move that confirms the validity of the breakout. In other words, the price returns to this line which previously acted as resistance, tests it now as support, and if it holds successfully, this situation forms a solid foundation for a new wave of upward movement. This is exactly the current situation. The price has broken out of the descending trend structure it had been moving within for a long time, and this breakout has created a positive shift in market sentiment. Now the price is undergoing a technically natural process called a retest. There is no reason to panic at this point. Although it may appear as a decline, this movement is actually part of a larger structure. Rather than instilling fear, this pullback should be interpreted as a technically reassuring test process. On the chart, such retest structures are generally considered indicators of healthy pricing. Especially when these pullbacks occur with lower volume and reduced volatility, they can signal that the price is preparing for a new upward move. What's important here is that the investor remains calm, avoids making emotional decisions, and maintains confidence in the technical structure. Because trend breakouts, which are among the strongest signals in technical analysis, can mark the beginning of long-term upward movements when followed by healthy retests. As long as the support line holds during this retest process and there is no sharp downward break, the likelihood of the price making another upward move is quite high. Additionally, it is very important to recognize this process as a correction. A price drop does not always indicate a negative outlook. On the contrary, such technical corrections allow new buyers to enter the market and lay the groundwork for a healthier rise. In such periods, the most important thing for investors is to be patient and not panic in response to the natural movements of the price within the technical structure. Because in technical analysis, structures generally operate within certain patterns, and for these patterns to evolve healthily, test processes like the retest are inevitable. Once this test process is completed, it is highly likely that the price will regain strength and continue its upward moves. Therefore, the current downward movement could actually be the beginning of a new uptrend. This situation presents a significant opportunity for investors who can view the market from the right perspective and remain disciplined in their technical analysis approach. It is important to remember that the break of a downtrend is the beginning of a transformation process. The first step of this transformation is the breakout. The second is the retest. The third step is usually the formation of a new trend. This new trend is often upward and can yield significant returns. Of course, it is essential to acknowledge that every investment carries risk and that no scenario is guaranteed. However, when one remains faithful to the technical structure and puts emotions aside, the probability of achieving successful results increases significantly. Therefore, the current drop observed in price movements is merely a retest of the trend and is a very positive development in terms of the overall technical structure. There is no need to panic because this decline may be a healthy correction that the price needs before turning back up again. This could create potential buying opportunities for investors. For those who buy at the right time and from the right levels, this process may open the doors to a major upward move. In other words, what appears to be a decline is actually the preparatory phase of a bullish scenario. But we can't make decisions based on trends alone. Let's also take a look at other metrics. Stay tuned.
I'm interrupting the video for a moment, friends, because BitTunex Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
Among the technical analysis tools used in the cryptocurrency markets, the inverse head and shoulders pattern stands out as one of the most reliable and trusted formations. It often signals the end of a downtrend and the beginning of a new upward trend. When we look at the potential inverse head and shoulders pattern currently forming on the chart, we can say that market behavior shows a significant resemblance to similar patterns observed in the past. The development process of the current structure is filled with details that attract the attention of investors familiar with technical analysis and potentially sets the stage for a high-reward opportunity. Initially, in the area where the left shoulder formed, a notable correction phase driven by selling pressure can be observed. Although this correction caused a significant price pullback, volume analysis provided early signs that the decline might be limited. Following this, a recovery began, and the head section at the center of the formation started to build. This area typically forms the deepest bottom and is the phase where investors panic the most. However, it is also the area with the greatest opportunity, as it is often where large buy orders begin to accumulate quietly, and institutional or experienced investors start to slowly enter positions. After the head section was completed, a recovery trend re-emerged, and price began to rise again. At this point, the right shoulder started forming. The right shoulder is psychologically critical for investors because it represents a zone where the market experiences uncertainty. Is this a trap? And decisions are not yet clear. However, from a technical analysis perspective, the final shoulder of such formations usually shows a pullback accompanied by lower volume, indicating that large players are still present in the market and its selling pressure remains limited. The current phase we are in is precisely where the right shoulder is forming, and the pattern is starting to complete. If price continues to move within the boundaries of this structure and respond strongly from support levels with upward momentum, it would be one of the most critical signals that the pattern is beginning to play out. Considering the slopes and the support resistance lines observed on the chart, this inverse head and shoulders pattern appears to be developing in a very healthy structure. One of the fundamental factors that increases the reliability of a pattern is volume behavior. Especially the differences in volume during the shoulder and head formations reveal how sound the structure is. During the formation of the left shoulder, volume declined. During the head, stronger selling pressure was seen, but the rebound afterwards was also strong. In the right shoulder, volume noticeably decreased, and price began seeking stability in a horizontal range. This clearly shows that sellers are losing strength, and buyers are becoming more confident in holding price levels. Another element necessary for the pattern to complete is the clear identification of the neckline and the movement of price toward it. The neckline is usually a straight or slightly sloped line connecting the peaks of the left and right shoulders. Price is currently observed to be approaching this line. This could be a sign of an imminent breakout with high volume, potentially preceding a short-term retest. If price successfully breaks above this neckline with high volume, the pattern will be complete and the target level will become technically active. So, what is the target level? In inverse head and shoulders patterns, the target price is calculated in a rather classic way. The distance between the lowest point of the head and the neckline is measured and added upward from the point where the neckline is broken. When this calculation is applied to the current chart, it reveals a target level representing approximately a 200% increase from the current price. This points to a very strong and optimistic scenario in terms of technical analysis, and also offers high motivation for investors. One of the most important aspects of these types of patterns is the retest phase that often follows a neckline breakout. Because after the breakout, price often pulls back toward the neckline, which now acts as a support zone. This test phase both confirms the validity of the pattern and provides a foundation for new position entry strategies by investors. Based on the current structure, the possibility of a pullback toward the neckline should not be ruled out. However, such a pullback does not indicate a return to a downtrend. On the contrary, it is a healthy support test following the breakout. Additionally, the overall market structure directly impacts the likelihood of this pattern's success. If there is a generally positive sentiment in the crypto market, meaning uptrends are continuing in major assets like Bitcoin and Ethereum, the chances of such patterns playing out increase significantly. The presence of positive macro signals at the moment is also causing investors to monitor this pattern more closely. Of course, as with any technical analysis pattern, there is a possibility that this one might not play out. However, historically speaking, inverse head and shoulders patterns have had a relatively high success rate. Especially when they appear at major bottom regions and precede strong rallies, they become formations that must be closely watched. Therefore, it's crucial for investors to analyze this setup not only from a price perspective, but also in the context of volume, timing, and general market psychology. If investors interpret this process correctly, avoid panic selling, and strategically enter positions, this pattern could offer significant profit opportunities in the short term. The fact that a target zone with approximately 200% upside is technically possible further emphasizes the importance of the structure. However, it must always be remembered that technical analysis tools represent probabilities, not certainties. They do not guarantee outcomes, but they are tools that offer statistical advantage. In conclusion, the inverse head and shoulders pattern currently forming appears to be a very healthy and promising setup from a technical standpoint. Price approaching the neckline, the right shoulder entering its completion phase, and positive volume signals all point to a possible strong breakout in the near future. If the expected breakout occurs and the pattern reaches its technical target, it could offer investors a potential return of approximately 200%. For this reason, this pattern stands out as an opportunity that should be closely watched by both short-term technical traders and mid-term investors alike.
RSI is an extremely critical indicator for investors to understand market momentum and evaluate potential reversal zones. When the RSI moves between the 30 and 70 range, it generally indicates a balanced buying and selling condition in the market, while movements beyond this range typically suggest that the market is approaching oversold or overbought conditions. Beyond these basic technical interpretations, trend structures that form on the RSI chart also offer a deeper look into the psychology behind price movements. Currently, a notable rising trend structure forming on the RSI indicator has caught the attention of short and medium-term investors. This trend structure serves as a support line that the RSI has tested multiple times over time, but has continued to bounce from without breaking. Such rising trends are considered very important signals, especially when the market maintains its bullish momentum. Because the RSI repeatedly approaching this trend line and bouncing back upward indicates that the market is not in a bottoming phase and that every dip is being viewed as a buying opportunity. In this context, if the RSI approaches this rising trend line once more, the probability of the market responding with another upward move is strong. This conclusion is not based solely on the RSI, but becomes much more meaningful when supported by price action. Especially when the RSI moves upward after bouncing from the trend line, it usually coincides with a simultaneous recovery in price. If in previous instances, price significantly appreciated following touches to this RSI support line, it is natural for such occurrences to influence investor expectations. This rising trend line on the RSI chart goes beyond being just a technical structure. It becomes a reflection of investor psychology. When analyzing technical data, people tend to look for patterns that have worked in the past, and this RSI trend line may once again influence decisions to re-enter positions. Therefore, if RSI approaches this support trend line again, many investors may interpret it as a potential signal to open long positions. When the RSI nears this rising trend line, an increase in trading volume is often observed. This suggests that investors are paying close attention to this level and are shaping their positions based on the reaction from it. Additionally, when the RSI starts to move upward from this support line, it can signal not only a short-term recovery, but also the beginning of a long-term trend. Especially if price is also reaching significant support levels during this period, the positive structure shown by the RSI becomes even more reassuring. The sustainability of this rising RSI trend depends on several factors. First, the general trend in price should be upward, because maintaining a rising trend in the RSI usually requires price to form higher lows and continue upward. If prices do not support this trend, the RSI may eventually break below this rising trend line, potentially triggering a correction or a deeper decline in the market. However, in the current situation, the RSI trend line is still intact and has not been broken. This shows that investors still have a strong technical argument to maintain hope.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.